वेलकम जयकिशन भाई. वेलकम विश्वेश भाई. श्रीधर भाई, shall we start? श्रीधर भाई. श्रीधर भाई. Shall we start?
Yes.
Welcome to another interesting webinar on GST to the members of all Gujarat Federation of Tax Consultants and Income Tax Bar Association Ahmedabad. Friends, as a part of AGFTC's initiative to give opportunity to young tax professionals to share their knowledge and impart their speech so that we can take the benefit of their expertise knowledge as far as the taxation laws are concerned. We have today Honorable Faculty CA Jaykishan Vidhwani. He is young tax professional practicing in litigations in GST. Friends, today's topic is important because GST has been introduced in the year 2017. But up till now, only the compliance has been done in GST. But now onwards, assessments and litigations are opening up in GST law. Friends, before attending any assessment under GST or fighting our case, fighting our client's case with the GST assessing officers, we must realize the facts and nitty-gritties of how to attend the assessments under the GST so that we can argue in a very effective manner. Today's webinar has been arranged to think about all these aspects, and our honorable faculty has done tremendous effort to prepare the today's topic. I welcome honorable faculty and all the participants in this webinar series. President of Income Tax Bar Association is not well, so he is not attending. So I request Honorable Secretary of Income Tax Bar Association, C.S. Sridhar Sir, to please introduce today's guest speaker.
Thank you, Karthikeya. I welcome all the participants on behalf of Income Tax Bar Association. It is pleasure to introduce today's faculty, who is very young and dynamic personality, CA Jaykishan Vidhwani. In a short span, he has achieved many professional milestones. Currently, he is regularly appearing before the Commissioner Appeals, CGST and SGST, for the appeals related to refunds, e-way bill registration, and recovery proceedings. He has worked with Deloitte Haskins and Sales LLP. Also, he did his internship at GK Choksey and Company in the field of audit and direct taxation. And he has worked with many listed clients in the field of manufacturing and media industry. His main area of focus is in GST advisory, and he is also authoring articles on GST in the monthly editions issued by various organizations. He is also an associated faculty with Gujarat University for GST certification course. At the educational part, he has done LLB and BCom. With this, I invite today's faculty, CA Jaykishan Vidhwani, for delivering his lecture on today's topic of types of assessment under GST. Jaykishan. Jaykishan, ભાઈ તમારું તમને sharing rights છે?
Yes, I would like to share. Yes.
છે ને? Okay, great.
Thank you, Sridhar bhai, for the warm introduction. Good afternoon to one and all present over here. First of all, I would like to thank various associations for giving me an opportunity to present my views on various types of assessment under GST. My today's agenda will be first, understand the legal provision regarding the assessment. Second is, what is the meaning of assessment? Third is various types of assessment. Fourth is recently provided, the government has provided a various list of parameters which on basis on which the case would be selected for the assessment process or scrutiny of returns. After that, we will move towards demand and recovery proceedings. And at the last, various recent judgments that have come under the assessment. I would like to start with one small clip. As this was one small video in which we can see how a common man is burdened with the correct tax compliances under GST. So we could see that everyone was walking in that same mud puddle and was being, it was causing them inconvenience. At the last part, in the second part, we could see how a young boy came. He visualized that no, things can be done also in this way. So he picked up the stone, paved a way, and he could. In GST also, I could say there are only 4 major things that need to be taken care so that we could avoid hurdles in GST. First is regarding the correct rate classification, whether the outward supply rate is correctly classified or not. Second is matching of GST credit in GSTR with GSTR 2A or 2B. Third is correct discharge of RCM. And fourth is correct liability discharge under the correct head. So with this, short video, let's start with the today's topic, various types of assessment under GST. Types of assessment, section 59 to 64, chapter 12. Assessment means determination of tax liability under this act and includes self-assessment, reassessment, provisional assessment, summary assessment, and best judgment assessment. So we can see these are the broad types of assessment which are there under GST. So we will look into each of them one by one. First is self-assessment. In this GST regime, government has placed complete reliance upon the assessee that whatever you will do will be correct, and we will accept the things as it is, and we will regularly conduct whenever required the assessment proceeding and audit the same. So first, under section 59, every registered person shall self-assess the taxes payable under this act and furnish a return for each tax period as specified under section 39. Now, under section 39, first GSTR 3 was introduced, and after various amendments, now at the last, only GSTR 3B is considered as return under section 39. GSTR 1 is a statement, GSTR 9C also is a reconciliation statement. An annual return is not a part of under section 39. So effectively, currently only GSTR 3B is the return which needs to be considered as a valid return under section 59. What is the definition of a valid return? Valid return means a return furnished under subsection 1 of section 39 on which self-assessed tax has been paid in full. Now, the assessee has to self-assess his GST liability considering the input tax credit available and discharge the full tax liability under this provisions of section 39. Now we have been seeing that we are not allowed to file consequent returns. એટલે અગર પાછળનું રિટર્ન બાકી હોય તો આગળના રિટર્ન આપણને ભરવા દેતા નથી GSTR 3B વેબસાઇટ ઉપર. એવું કેમ થાય છે? એનું પાછળનું કોઈ બેકઅપ છે? Is there any legal provision which restricts it? Yes, there is a legal provision under section 49(8) wherein there is a specified order that first self-assessed tax dues related to return of previous period needs to be discharged. After that, self-assessed tax and other dues related to the return of the current tax period which you are filing needs to be discharged. And in third, any other amount payable under this act for the rules made thereunder, including the demand determined under section 73 or 74 needs to be discharged. So this provides a reason why GST portal is not allowing us to file any further return till the last return is filed and each and every liability related to return which is disclosed on the self-assessment basis is discharged. Moving further, what will happen if the self-assessed tax as determined in the return is not paid? Now you will be shocked that how is it possible that whatever you determine in 3B needs to be paid. So as per provisions of section 73(11), 10% of tax or rupees 10,000 whichever is higher is the penalty that needs to be paid if the self-assessed tax is not paid in time. So the section reads that overriding anything contained in subsection 6 or 8, penalty under subsection 9 shall be payable where any amount of self-assessed tax or any amount of tax collected has not been paid within a period of 30 days from the due date of payment of such tax. Now, in the practice, we have observed that this penalty is not being levied. Why? There is a relaxation for the same. So, circular number 76/50/2018 GST dated 31/12/2018 gives relief that provisions of section 73(11) can be invoked only when a notice under section 73(1), that is DRC 1 or 1A, is issued then only provisions of section 73(11) can be invoked, that is 10% of tax or 10,000, whichever is higher, needs to be paid as the amount of penalty. So this circular grants us a relief that the penalty which is mentioned under section 73(11) cannot be invoked, and only a general penalty under section 125 can be imposed. Moving forward, what if the self-assessed tax still remains unpaid? So the recovery proceedings under section 75(12) can be initiated, that overriding anything contained in section 73 or 74, where any amount of self-assessed tax in accordance with the return furnished under section 39, that is 3B, remains unpaid either wholly or partly, or any amount of interest payable on such tax remains unpaid, the same shall be recovered under section 79. The recovery proceedings shall be initiated. For the purpose of this subsection only, self-assessed tax shall include a tax payable in respect of details of outward supply furnished under section 37, but not included in 39. Now, what is regarding 37? It is GSTR 1. So, tax payment which has been declared in GSTR 1 and tax on which has not been paid in GSTR 3B can only be recovered in this provision of section 75(12). I would like to focus on the word tax payment which is pending. Any other payment, for example, interest or anything, cannot be recovered without proper SCN. Now, there is one judgment of MS LC Infra Projects Private Limited, wherein it was held that recovery proceedings under 75(12) can be initiated for tax which is outstanding without issuing any SCN. But that section is only applicable for self-assessed tax which is declared and for which no quantification or determination is required by any authority, because assessee himself has declared the amount of tax payable. So in case the proper officer wants to recover the amount of interest, if any, then he has to issue first a proper notice, show cause notice, and then only the recovery can be made, and this was answered in the favor of the assessee. It provides 75(12) provides no liberty for the officer to straight away proceed with the recovery of tax without recovery of interest or any other amount other than self-assessed tax without providing a proper opportunity of being heard. Second category of assessment is provisional assessment, which is a part, I could say that it contains some provisions same like advance ruling, but is different in many aspects. So I would like to say that it contains majorly two parts. When a taxable person is unable to determine only two things. First is relating to the value of goods or services and what is the rate of tax applicable. As it can be seen in this image, that a person is confused, means he is just a similar taxable person who is confused that what is the value of goods or service or what is the rate of tax that is applicable, because every now and then the amendment is coming relating to rates of tax applicable. So he can request to the proper officer in form ASMT 01 to assess the payment of tax on provisional basis. Once the application is received by the officer may ask to submit any additional documents, that is in form ASMT 02. The officer can issue a notice asking for some additional documents which may be required. Based on the means notice received from the proper officer asking for the further details, the taxpayer has to reply in ASMT 03. Once the reply is received, the proper officer has to pass an order in form ASMT 04 within a period not later than 90 days from the receipt of request of provisional assessment. So this would be the first provisional assessment order which will be passed by the officer. order shall indicate amount of bond and the security to be furnished not exceeding 25% of the amount covered by the bond. So here comes the main provision that we have to submit two things to the officer. He will order for a bond as well as a security. There is a difference between bond and a security. Bond is just an undertaking like we give under LUT. We submit a letter of undertaking under GST, wherein we undertake to the President of India that if any tax payment arises in future regarding this export transaction, we will undertake to pay to the government. Similarly, here also a bond needs to be furnished, and security is relating to any particular bank guarantee form. Now, a bank guarantee will be issued only when assessee deposits a similar amount. Means, for example, if we need a security or bank guarantee for rupees 10 lakh, then 10 lakh rupees FD would needs to be provided to the bank. Then only bank will give a bank guarantee. So here bond of the full amount, and such 25% of the amount of bond has to be submitted in the maximum. Means the order may differ, but maximum limit is kept here that 25% of the amount covered by bond will be given as a security. And this will be mentioned in the ASMT 04 order passed by the officer. The taxpayer shall execute the bond in form ASMT 5 along with the guarantee. Means the bond which needs to be undertaken just like LUT needs to be executed in form ASMT 05. Now, once this provisional assessment is done, final assessment has to be finalized within a period of 6 months from the date of communication of the order in form ASMT 04. Additional information for passing any final order means final order. First, within 90 days, the officer will give a provisional refund, a provisional order of assessment. After that, within 6 months, he has to pass the final order in form ASMT 06. Additional information will be requested in form ASMT 06 and final order in ASMT 07. So this period of 6 months can be extended by the joint and additional commissioner for a further period of 6 months, or by the commissioner for a further period of 4 years. Now, for example, if we had at the time of provisional assessment, we had paid at the rate of 12%. And now at the time of final order, it is decided no, it has to be paid at the rate of 18%. So the amount which is the differential tax liability will have to be paid along with the interest, and vice versa. We had paid at the rate of 18%. Now the amount is finalized at the rate of 12%. So within it has to be refunded, and if it gets delayed, then interest under the provisions of section 56 at the rate of 6% needs to be provided to the assessee. Yes, this is a very interesting question. What is the difference between a provisional assessment in GST regime and an advance ruling? Because both seems similar to us, that in provisional we can ask similar questions in advance ruling also. So I have highlighted what can be asked in provisional assessment and what are the questions which can be asked in the advance ruling. First question is regarding the value of goods or services. It can be asked in provisional assessment as well as advance ruling. Rate of tax applicable on goods or services in provisional assessment and advance ruling both. Applicability of any notification, for example, in the case of builder or any particular industry. So it cannot be asked at this stage of provisional assessment. It has to be asked before the advance ruling authority. Admissibility of any input tax credit, whether, for example, I will be eligible for this input tax credit or not, cannot be asked in the provisional assessment application. It can be only asked at the time of advance ruling. Next is regarding liability of registration under Act. Whether I am liable to register under the Act or not can be asked only in the case of advance ruling and cannot be asked in the provisional assessment. Whether the transaction qualifies as a supply cannot be asked in the provisional assessment. It can only be asked under the advance ruling. For the determination of a time of supply, it cannot be done in the case of provisional assessment, and in advance ruling we can ask. So based on this slide, we can see that what are the different questions which are allowed to be asked before at the time of provisional assessment, and what are the questions that are allowed to be asked at the time of advance ruling. So this will be my today's major agenda. It's regarding scrutiny assessment, which we are facing many notices daily. So I have tried to cover as much as possible on this topic of scrutiny assessment. This is how the officer scrutinizes the return. That we can see this old man is having one paper. They are our GST returns, and he is using a magnifying lens to particularly check what are the, but is there any discrepancy or not. So there are few conditions which need to be fulfilled by the officer before proceeding under this scrutiny assessment. So we will see one by one. First, the scrutiny assessment is only applicable on registered persons, persons who are registered under the GST. Next, proper officer may scrutinize the return and related particular to verify the correctness of return and inform discrepancies in ASMT form ASMT 10. So here we need to, I would like to highlight three things. That first, he should be a proper officer. Proper officer, I have special slide for it, who have been defined under CGST and SGST. There are certain new amendments also in SGST Gujarat Act. I will highlight the same in the further. Second is, it should be only to verify the correctness of the return. Return, as we saw, that GSTR 3B as specified in section 39 is the return under GST. Third is that all the documents should be available with him. Means whatever the documents are available, he can only rely upon them to issue a notice and identify a discrepancy. He cannot presume anything. એવું ના કહી શકે કે ભાઈ આ ઈ-વે બિલમાં તમે આમ હતું એટલે હવે તમારું આટલું ટેક્સ થાય and this is the notice. He cannot say. He has to particularly pinpoint that this is the discrepancy that I have found in the existing returns that are already filed by you, and the same needs to be clear. So as I said, that they are purely on the basis of available records and not on any presumption or assumption. He cannot presume that this GP is there, you need to pay this much tax. It cannot be proceeded with under this section. Against the notice received in form ASMT 10, reply needs to be filed by the registered person in form ASMT 11. In case a satisfactory reply is received by the proper officer, he may drop the proceeding in form ASMT 12 and issue an order. In case when there is no satisfactory reply within 30 days of being informed by the officer or such further period as may be permitted by the officer, or once the registered person accepts that he has this discrepancy but does not take a corrective action. For example, if we have accepted, yes, there is a difference between 2A 3B, but we have not taken a corrective action by way of reversal in the further month or filing a DRC 03, then he will not drop the proceeding and proceed further. So what are the further stance that is available to him. What is the further course of action that he will take? First action that he can refer the case under section 65 for further audit by the GST departmental audit. Means he can refer a case for the to the departmental audit section, wherein they will come and verify our record. After this, there is a provision of special audit under the GST Act under section 66. He can refer the case for a special audit by a chartered accountant or a cost accountant. Third is there is always a preventive department in CGST, and in SGST it is known as enforcement department. He can refer the case for further inspection or search, or proceed with the issuance of show cause notice under section 73 or 74, whichever is applicable. So if we go with the flow that he has the assessee has filed the returns are available with the officer. Officer has analyzed the returns available to the notice in form ASMT 10. Once the notice is issued in form ASMT 10, the assessee has to reply in form ASMT 11. If the officer finds it satisfactory, he will drop the proceeding in form ASMT 12. If he does not find the reply submitted by the assessee to be satisfactory, or if the assessee has accepted and he does not take the corrective action, he can further go for the 4 actions. This is departmental audit. Second is a special audit. Third is reference to the preventive department. Fourth is regarding the issuance of SCN under section 73 and 74. Meaning of a proper officer for scrutiny assessment. There are three subsections of section 61, 61.1, 61.2, 61.3. As we saw that first there is a power to verify correctness or seek an explanation under section 61.1. Second is the power to drop the scrutiny proceeding. Third is power to initiate the further proceeding under section 65, 66, 67, 73 or 74. So under CGST, wide circular means CGST department circular number 3 2070 dated GST dated 5/7/2017 was issued, wherein superintendent of central tax as per circular number this has been given a power to conduct proceeding under this section of 61.1, 61.2, 61.3. So a superintendent of CGST can verify correctness, he can drop the proceeding, or he can further refer the case. In SGST, to verify correctness and seek explanation, assistant commissioner and state tax officer both were given power in 2017 only. So there is no change in. For the power to drop the proceeding, considering the explanation which is received from the assessee, a latest amendment is there that even state tax officer, while order number GSL bar S5 bar B26 dated 27 October 2021, a special power has been given to state tax officer also, that if he is satisfied by the response of the assessee, he can drop the scrutiny proceeding in form ASMT 12. Further, the power to further refer the case for special audit, preventive department or 70G74 or audit department. A power has also been given to state tax officer. Earlier it was only with the joint commissioner, deputy commissioner, assistant commissioner. Now it has been, by this order number, it has also been given to the state tax officer. So this slide gives us a clarity that who is a proper officer for scrutiny assessment, who has all the powers of the to conduct the proceeding under this act. Now we all wonder that અમારો કેસ સ્ક્રુટિનીમાં આવ્યો કઈ રીતે, કે આ લોકો પાસે કયા એવા સોર્સ છે કે આ લોકોને ખબર પડી ગઈ કે આ કેસને આપણે સ્ક્રુટિનીમાં લઈએ. So first is they have the returns. In next slide, I have highlighted various sources. So selection of, so these are the four sources. Selection of returns for scrutiny is to be based on a specific risk parameter. For Directorate General of Analytics and Risk and Management, DGARM, has been assigned the task to select the GSTs registered with the Central Tax Authority, whose returns are to be scrutinized, and to communicate the same to the field formation from time to time through the DDM portal to the nodal officer of the commissioner concerned for further action. So there is a special wing which is established at the central level in New Delhi, whose work is only to analyze the returns and based on the certain criteria which are available with them. For example, 100% tax payment by way of ITC means assessee આખા વર્ષમાં એક બી રૂપિયો cash ભર્યો જ નથી. So that case will be flagged and will be transferred to the jurisdictional officer. He will have to verify each and everything regarding the correctness of the returns file and the data. Second is Advait, advanced analytics in indirect taxation. So this is also an analytical team. Third is the GST network. And fourth is the e-way bill portal. And how many e-way bills were generated during this period of tax period. Now, in the upcoming slides, I will be discussing the parameters. As income tax releases each and every year, that what are the parameters on which the scrutiny notices will be issued. Similarly, in GST, government has issued a guideline that what are the scrutiny parameters. So, first parameter is comparison between GSTR 1 and GSTR 3B. Liability as declared in GSTR 1 versus GSTR 3B. In GSTR 3B, in column in table number 3.1a relating to outward supplies taxable, 3.1b outward taxable supplies zero rated versus the tax liability as declared in GSTR 1. In table 4 of GSTR 1, we declare B2B invoices other than attracting reverse charge and supplies made through e-commerce operator. In table 5, we declare interstate B2CS means business to consumer unregistered person. Amount of transaction is greater than total 2.5 lakhs. Table 6 is relating to zero rated supplies and deemed export. Table 7A1, table 7B1, interstate and interstate both business to consumer transaction which are less than 2.5 lakh. Table 11A and 11B, which are relating to advance received during the period, advance adjusted, along with the amendments done. This gives add, subtract what B2B, B2C plus advances received less advances adjusted. So this will give us a net taxable figure of supply declared in GSTR 1. So if there is a short payment of, if we have declared 100 rupees in GSTR 1 and in GSTR 3B, if tax payment of 80 rupees is only done, then our case can be selected for the purpose of scrutiny. This is one just parameter. This is parameter. Second is reverse charge mechanism. In GSTR 3B, tax liability on account of RCM needs to be declared 1D. Now, in same, this amount which has been declared as a liability by us and has been discharged as a self-assessed tax. First, this ITC availed in table 4A2 import of services and import 4A3 relating to the other reverse charge credit. So we have table 3 for the declaration of output liability. Table 4 of GSTR 3B is for the availment of input tax credit. if the amount of ITC availed as credit is greater than the amount discharged as liability in table 3 of GSTR 3B, then it will raise the flag. Means ITC availed cannot be greater than the amount of RCF paid. Second, it will be compared with the amount reflected in GSTR 2A. If we observe GSTR 2A, in table number 3 and 5, that it mentions the transaction on which tax needs to be paid by the recipient under the reverse charge. So, એમાં જેટલા બી yes હશે એનું total તમારા outward liability જોડે match થાય છે કે નહીં. Third is tax oblique says paid in cash. So, whatever amount is declared as amount discharged via cash. So, in 3B we have seen in table 6.1 total tax payable versus how it is discharged via electronic cash ledger or credit ledger, it is mentioned. So if the amount discharged via cash mentioned in table number 6.1 is less than the outward liability mentioned in table 3.1, then this system will raise the flag. So whatever amount is declared as a liability in table 3.1 needs to be discharged via cash, and only to that extent the ITC is available to the assessor. Next is ITC on account of input service distributor under GST. In GSTR 3B versus GSTR 2A. ITC availed in respect of ISD, inward supply received from the ISD in table 4A4 of GSTR 3B, may be verified with table 7 of form GSTR 2A. So this is just like a B2B transaction. If we are the inward recipient of the ISD credit, then in our GSTR 2A, the amount of ISD credit will get reflected. And the amount which is availed by us in GSTR 3B should not exceed the amount reflected in GSTR 2A. Next parameter number 4 is input tax credit. In GST, there is a column of all other ITC, which is table number 4A5 of form GSTR 3B. Now, this is the consolidated credit amount of B2B transaction which we have received. So, the amount of credit availed in table 4A5 should not be greater than the amount of credit which is getting reflected in table 3 or table 5 of form GSTR 2A. જેટલી 2A માં ક્રેડિટ દેખાય છે, જો એના કરતા વધારે આપણે અગર ક્રેડિટ ક્લેમ કરી હશે GSTR 3B માં, so સિસ્ટમ માં ફ્લેગ થઈ જશે. Next criteria is turnover. This is the 5th criteria we are discussing for the scrutiny. So these are indicative list, means આ હશે તો compulsory flag થવાનું જ છે. Turnover reflected in GSTR 3B versus TDS or TCS or TDS credit reflected in GSTR 2A. It may be verified that the taxable value declared on account of outward taxable supplies, that is 3.1A of GSTR 3B, it should be for TCS and TDS credit as per column 6 of table 9 of form GSTR 2A. If we are making a supply through e-commerce operator or to a government organization, through e-commerce operator, if we are making a supply, then the e-commerce operator will deduct TCS. And if we are making a supply to the government, then the government organization will deduct TDS. The same will be available to us as a credit. So the amount of on which the TCS or TDS is deducted will be reflected in table 9 of form GSTR 2A. So minimum amount which needs to be declared as the outward taxable supply in table 3.1A of form GSTR 3B should not be less than the amount of TCS and TDS credit as reflected to us in form GSTR 2A. મિનિમમ આટલું ટર્નઓવર તો બતાવેલું હોવું જોઈએ જેનું TCS અથવા TDS ગવર્મેન્ટ ઓર્ગેનાઇઝેશન અથવા ઈ-કોમર્સ ઓપરેટરે કરેલ છે. ઈ-વે બિલ આપણે મહિનામાં 1 કરોડના ઈ-વે બિલ જનરેટ કર્યા amount of basic amount. શું એટલું ટર્નઓવર GSTR 3B માં બતાવેલું છે? So based on the liability of outward taxable supply, which is declared in table 3.1A and 3.1B of form GSTR 3B, should be verified with the tax liability as declared in the e-way bills. So, જેટલાના e-way bill કર્યા છે એટલી તો minimum tax liability declare હોવી જોઈએ. If it is the amount of outward liability, if it is declared less than the amount of tax slab e-way bill generated, then system of flake raise thase. Moving forward, cancelled registration. So this is the 7th parameter for scrutiny. In this case, claim of input tax credit from dealers whose registration is cancelled and whose registration has been cancelled retrospectively, means from 1/7/2017 since the GST is introduced. Then if we have claimed input tax credit of such dealers, it is getting reflected in our GSTR 2A and we have claimed the same. Then system will raise the flag of scrutiny. As the provision says that recipient is not entitled to claim the input tax credit in respect of invoices or debit note issued after the effective date of cancellation of the registration. So here both cases are covered, where the registration has been cancelled retrospectively from 1/7/2017 or from a particular effective date. So both will be covered here. This is the 8th parameter we are discussing. સ્ટાર્ટિંગમાં જ્યારે GST આવ્યું તો બધાને એવું હતું કે આપણે GSTR 1 માં સેલ બતાવી દીધું, એનો ટેક્સ ભર્યો કે નહીં એ કોણ જોવા જાય છે. So department has come up with a solution that in GSTR 2A it is reflected that there are 2 separate columns: the month in which the supplier has filed his GSTR 1, and second column whether the supplier has discharged the GST tax liability in GSTR 3B or not. So ineligible ITC availed in respect of invoices of the debit notes issued by the suppliers who have just filed GSTR 1 but have not uploaded GSTR 3B is not available to the recipient. Deadline. This deadline is pertaining to September. Now, as we all know that it has been further extended to the November as per the provisions of Finance Act 2022. Very to be done in input tax credit or output tax liability pertaining to the financial year can be done for a period of 6 months, that is September, now November, after the end of the financial year. So amendments can be in form of declaration of any output tax liability, availment or reversal of any input tax credit, payment of any RCM, availment of credit of RCM, or reversal of tax payment. So this is also criteria of parameter for the scrutiny purpose. Whether GSTR 3B of a tax period is filed after the last date of availment of ITC in respect of any invoice or debit note as per section 16.4, that is September. In such cases, no ITC shall be availed in the return. So if the GSTR 3B for a tax period is filed after September of the upcoming, after the end of the financial year, the ITC will not be available in the return. So we have seen that in GSTR 9, table 8A, there is auto-populated input tax credit. So in such amount, the amount reflected in table 8A of GSTR 9, such credit is excluded, for which GSTR 3B is filed by the supplier after the end of September 18. There is a special removal of difficulty order for financial year 17-18, where the extension for filing has been provided till the month of March 2019. So these were the criteria relating to the late filing of GSTR 3B after the month of September. Next criteria is regarding import. ITC availed in respect of import of goods in table 4A1 of GSTR 3B may be verified with the corresponding details in table 10 and 11 of form GSTR 2A. So in GSTR 2A, just like B2B invoices, import invoices are also getting reflected. So such need also to be verified. So if the input tax credit availed as a import under table 4A1 of GSTR 3B is greater than the amount reflected in GSTR 2A, then the system will raise the flag, because the amount which is reflected can only be maximum, that amount can only be reflected as a credit. We in practical life, we are facing issues that the non-EDI port, means non-integrated ports, are issuing bill of entry and which is not getting reflected properly in GSTR 2A. For this, manual submissions need to be done. That if the notice comes regarding the discrepancy, so we need to submit proper document bill of entry evidencing the payment of tax, and the same has been correctly availed in the GSTR 3B. This is a live notice example. Whether the reversal as required in as per rule 42 or 43 is done or not. So what is this rule 42 and 43? Rule 42 and 43 is regarding the reversal of common input tax credit on account of input or input services or capital goods. So if an assessee is engaged in the business of regular supply of goods, taxable supply of goods, and also the exempt supply, then he has to proportionately reverse the amount of common input tax credit attributable to the exempted supply of goods or services. So as this notice says that there is rupees 1,29 lakh 81,541 rupees total exempt, nil rated and non-GST supply made by you. However, ITC reversal in the return is nil, which is lower than expected ITC to be reversed. You are directed to explain about discrepancy with reference to your books of account maintained under section 35 of CGST and Gujarat GST Act, read with rule 56 and 57 of CGST Rule 2017 and Gujarat rules, read with Section 20 of the IGST Act and further read with Section 11 of the Goods and Services Compensation Act 2017. So what we have observed that they are straight away taking the amount mentioned in this as exempt supply in GSTR 9 divided by the total supply made multiplied by the total ITC availed. એમની પાસે બાયફર્કેશન જ નથી કે આમાંથી ગુડ્સની કેટલી છે, કોમન કેટલી છે, સ્ટ્રેટ હવે એના બેસિસ ઉપર એ લોકો નોટિસ ઇસ્યુ કરી દે છે. So we have been provided a specific table in GSTR 9 wherein we have to provide the details of input services, capital goods. But based on the relaxation provided by the government in 2017, 18, 18, 19, 19, 20 and even 2021, regarding that we are allowed to report the consolidated figure in inputs column, that we are not, it is not compulsory, it is optional column wherein we need to give the bifurcation. So majority of us have reported in under the column of inputs. So they are straight away applying the ratio of reversal on the inputs, whether it is relating to the common credit, common input services, input goods, nothing doing, straight away reversal. So we need to provide a proper ITC register explaining that with each and every description, that ITC register we need to add one more column regarding the what is the P&L head, and another column is relating to whether it is a common credit or specific business related credit. So this ratio of reversal is applicable only in case of common credit and not the entire input tax credit. So this is one of the parameters wherein the notices are being issued that you have not done the reversal as per rule 42 and 43, which as per them needs to be done on the full amount. Next is GST interest liability. Till now we have enjoyed the golden period wherein there was this interest liability was to be declared only on self-assessment basis. There was no mechanism to determine it based on the automatic by the portal. So this is also one of the parameters for scrutiny. When the registered person has filed his GSTR 3B after the due date, whether the amount which is needs to be discharged by the electronic cash ledger, whether the registered person has paid the interest liability or not. If you have discharged, for example, after 6 months of the due date and not paid any interest liability because portal is allowing to file the return, tax is compulsorily to be paid, portal is not allowing. But if the interest liability is pending in terms of section 50, that is liability to the extent on which only needs to be discharged by the electronic cash ledger, then such interest liability, whether it is paid or not, if it is not paid, so the system will raise a flag that yes, you need to discharge this interest liability. Late fees, another gray area. If at the time of filing of returns, if any error was committed, then and if the return is filed after the due date, then there is a notice that whether the registered person has paid late fee in terms of section 47 in respect of returns or statement which are furnished after the due dates. Practically, it is not possible to furnish without return, without payment of late fees. But even if it is furnished, then this provision would come into picture for GSTR 9C, because GSTR 3B, 9, GSTR 1, if any penalty is applicable, it was getting auto reflected in the upcoming month or the same month in majority of cases. GSTR 9, it is also not allowing to file without payment of penalty or late fees. So in case of GSTR 9C, where it is a discretionary power, and there is no specific provision for the levy of late fee. In such cases, the late fee, GST late fees assessment will be done. And this is the one of the parameter for the scrutiny. So if you have not paid the late fees, then also the scrutiny can be initiated by the officer. This is also a live example of one of the parameters for the scrutiny. 100% ITC utilization for the payment of tax. So I would like to return notice that on desk preview of your online GST return, it has been found that you have utilized 100% of the ITC against payment of output tax. So you are hereby asked to furnish the reason of so much higher utilization of input tax credit against the payment of output tax with all the adequate supporting document. Second parameter, as we discussed, a reversal is short under rule 42 and 43. So I have analyzed few reasons which can be helpful to many of us. That what are the what could be the reason that આપણે ક્યારે કેશમાં ટેક્સ ડિસ્ચાર્જ કરવાનો આવતો જ નથી. First, higher inventory turnover means the amount of inventory lying with us at any given time is of such high amount that we have always input tax credit available. Our business model is such that we are required to keep an X amount of minimum stock. So the ITC is getting accumulated only to the extent of stock amount. Second reason could be inverted tax structure. So inverted tax structure, for example, if we are purchasing at the rate of 18% and supplying at the rate of 5%. So 13% tax તમારો જમા રહેવાનો જ છે અને મને ક્યારે tax payment કરવાનું cash liability માં આવવાનું જ નથી. So this could be also the reason. So આવા કેસમાં શું થાય, only RCM amount is discharged in cash. Other than RCM, no amount is to be paid in via electronic cash ledger. Third reason could be કે અમારું export oriented unit છે. If we are supplying we are engaged in the supply of zero rated goods or services, એ કેસમાં બી આપણું ઇનપુટ ટેક્સ ક્રેડિટ છે, સપ્લાય અંડર LUT or બોન્ડ છે, એ કેસમાં બી પેમેન્ટ ઓફ ટેક્સ ખાલી RCM નું જ આવવાનું છે કેશ થી, બાકી બધું તો ઇનપુટ ટેક્સ ક્રેડિટ થી જ પેમેન્ટ થશે. So first was high stock ratio, second was case to case basis we can identify that what was the actual reason. Few starting years, if there is a major capital investment done by the company, capital investment, capital goods purchase, plant and machinery purchase, so for initial years the company will not be required to make payment because they have the accumulated input tax credit. For example, if they have imported a machine, for example, or purchase local purchase, so in that case also the input tax credit at any given point of time will be available to them for utilization towards payment of output tax liability. So I have highlighted few examples wherein there is a possibility of 100% ITC utilization for the payment of. There can be other scenarios also. These are just the illustrative list which I have identified. There can be also other case-to-case basis. So these were the 14 parameters. I would again like to highlight that these are only an indicative list. આ પેરામીટર્સ તો એ લોકોને ધ્યાનમાં છે જ. આના કરતા સિવાય બી અગર કોઈ ફોર એક્ઝામ્પલ કોઈ જગ્યાએથી બોગસ બિલિંગમાં પકડાયું આપણો સપ્લાયર, એ કેસમાં બી આપણા ત્યાં ઇન્ક્વાયરી આવી શકે. તો there can be other parameters also, but this is a published list of parameters which अगर आमा कहीं थયું तो compulsorily your case will be selected for the basis of provisional assessment. So to sum up provisional assessment once again, based on the available records with the proper officer, no presumption assumption involved of every registered person, he shall scrutinize the returns available on record. Once he is ready with the discrepancy, he will issue a notice in form. The assessee will submit the reply in form ASM. Either the officer will proceed with the droppage of notice, or he will issue a further. If he is not satisfied with the reply, he can further initiate the action of audit, special audit 7374, or inform to the preventive department. So this is the most practical part of provisional assessment which we are currently dealing with, and majority of us have attended the proceedings of the same. Next type of assessment is also known as best judgment assessment. And જે records available હોય એના basis ઉપર assessing officer or proper person who have for a subsequent period of 6 months have not furnished the return. So the section goes as, when a registered person fails to furnish a return under section 39 or section 44 or section 45. 39 is 3B, 44 is annual return, and 45 a final return. A notice in form GSTR 3A shall be issued, require him to furnish such return within 15 days in such form and manner as may be prescribed. Even after aforesaid notice is, if a registered person has not furnished return under section 39 or final return under section 45, then best judgment order based on the available records or information already gathered is passed in form ASMT 13. If within 30 days of order in form ASMT 13, the assessee furnishes the valid return, as we have seen in section 216. If the assessee furnishes a valid return, shall stand withdrawn. ASMT 13, the assessee furnished the valid return, the order in form ASMT 13 shall deem to be withdrawn. Liability of interest and late fees will continue. So this is a flow chart of the same. That first, a notice in form GSTR 3A for non-filing of return under section 46 will be issued. When return not filed or best judgment assessment form ASMT 13 will be passed by the officer. Summary of order in DRC 07, that is a summary order of demand, will be uploaded. If within 30 days of the ASMT 13 valid return is furnished, then the order stands withdrawn. In DRC 08, summary of rectification or withdrawal of order will be passed. So this is a process flow for catching hold of non-filers of GST returns, whether it may be GSTR 3B or final return after the closure of the business. There is an important judgment of PB Enterprises, wherein it was held that to a benefit, if ASMT 13 is issued, let's go to the previous slide. So once ASMT 13 is issued, if 30 days are passed, after 30 days, if the assessee comes कि ना आज हमारे return भरवा है, so whether this benefit of withdrawal which is provided in the act itself, whether it will be available even after that, the answer is no. here it was held that on 20 August 2019, an email was sent to the registered email ID through service of notice, and it was a valid service of notice as per section 161(1)(c) D of SGST Act. The petitioner cannot deny the fact of receipt for the purpose of filing of return as contemplated under section 62 of the SGST Act with a view of getting the assessment order withdrawn. Since the return filed by the period for the period April and May was beyond the prescribed date, मतलब 30 days में नहीं file करो after ASMT 30. After the date of service of the assessment order to the web portal, the petitioner cannot aspire to get the benefit of withdrawal of the assessment orders contemplated under 62. So this makes it pretty clear that once a negative order or best judgment order has been passed in form ASMT 13, 30 દિવસમાં તાત્કાલિક ધોરણે એના returns file કરી દો, which will give you a benefit of withdrawal. Otherwise, you cannot challenge the order. Second important judgment is of Sangres Tiles Limited of our Honorable Gujarat High Court. This act gives a particular flow of recovery also, assessment also, and initiation of any proceeding. So there is a proper flow. That first, there is non-filing of return. Assessee needs to be given an opportunity. If the assessee does not file the return even after giving such opportunity, then proceed with ASMT 13. If it files the return, drop the proceeding. If it does not file, then initiate the recovery proceeding. In this case, the assessing officer straight away proceeded with the provisional attachment under section 83. So the Gujarat High Court struck down the order wherein it was said that according to the scheme of the Act, section 83 would come into play only after the necessary action is taken under section 62 of the Act, that is best judgment assessment order is passed, and the assessee has not furnished the return even after that, and ASMT 14 is not there. Section 83 makes it clear that during the pendency of any proceeding under 62, if the commissioner is of the opinion that for the purpose of protecting the interest of the government revenue, he may, by order in writing, attach provisionally any property including the bank account belonging to the taxable person. If it appears that much before the notice under section 46 regarding the non-filing of return came to be issued, or rather much before the assessment could be undertaken under section 62 of the Act, the authority straight away proceeded to pass order of provisional attachment of the goods as well as the bank account. Such action cannot be held in accordance with the law. It is not in accordance with the law that you straight away property attach kari do. First, give him an opportunity to file the return. If he does not file, pass the best judgment order, assessment order based on the available records. They cannot ask for any records for passing the best judgment assessment order. And once the best judgment order is finalized, then only you can initiate the provisional attachment. And we will see in the upcoming slide that for initiating provisional attachment provisions, it is compulsory to establish that assessee is going to run away. If the assessee is live, he is responding to the notices, if he is available and has shown a good corporate behavior, then the provisional attachment cannot be done. Now next is regarding the assessment of the unregistered person. As we have seen that thousands of notices have been issued for the financial year 14-15, 15-16 on the income tax data of services shared with the service tax department. Earlier it was not integrated, that service tax department was separate, income tax department was separate. આપણે અહીંયા ઇન્કમ ટેક્સ રિટર્નમાં કરોડો સર્વિસનું ટર્નઓવર કરોડો રૂપિયાનું બતાવેલું હોય, પણ સર્વિસ ટેક્સ રજિસ્ટ્રેશન નંબર જ ના લીધો હોય. It was assumed that these departments are different. One can be handled and other can be handled in the other way. Now, once there was a sharing of data, this gave rise to the n number of notices that you have declared this amount of turnover in your income tax return. Please show us the reason that why the service tax liability should not be discharged. Same is the case, and the same is carried forward in GST, wherein assessment can also be done of the unregistered person. Now, you must be thinking that what is the meaning of an unregistered person? It means a taxable person who is liable to be registered as per section 22, 24 compulsory registration, or who has crossed the basic turnover limit but is not registered. Now, he has voluntarily decided that he will not register. Such case can be, assessment of such cases can be done under section 63 read with rule 100. Or there is a second category also, that whose registration has been cancelled suo motu without an application by the office assessee. So in GST there are two types of cancellations of registration. First is where an assessee himself makes an application for cancellation of registration, and second is official on its own based on certain parameters he has received or details which he has, concrete material, proceeds with the cancellation of registration suo motu. So this is known as suo motu cancellation. So in such cases also assessment can be done as per provisions of section 63 read with rule 100. As we saw that a taxable person who is liable to pay the tax, proper officer shall assess tax liability on best judgment basis. That proper officer shall issue a notice in form ASMT 14, time limit of 15 days, and an opportunity needs to be given that why you were not registered or why we should not proceed with the recovery proceedings under the GST Act. And such order has to be passed, means ASMT 15. Other same, it is a carry forward provision of service tax that within 5 years from the due date of annual return, if the department has the information first that the assessee was liable to be registered but he has not registered, he is a taxable person who was liable to be registered but not registered, or whose number is cancelled, then within 5 years from the due date of annual return, ASM order in form ASMT 15 will be passed. So ASMT 14 is a show cause notice that they have certain relied upon documents which show that you are liable to register, but as per their records you have not obtained registration, or they have certain other records which show there is a higher tax liability and you have not discharged the same. So they can continue with the assessment. So first is ASMT 14 and ASMT 15 is an order wherein there will be a quantification only, wherein based on the available records they will quantify the amount of liability. Procedure of section 73 or 74 need not be followed for the time limit of issuance of the notice. So this is once again we would recapitulate the flow. Registration not obtained / registration cancelled suo motu. SCN for best judgment in ASMT 14 is issued by the officer. Pass an order in form ASMT 15 based on the reply received and the available records. So this is relating to the assessment of an unregistered person. So we have seen that there is only two scenarios which have been itself provided in the act. The unregistered person નું assessment કરવું હોય So firstly, he has crossed the limits and he has not taken registration. And second is, number आपने he cancelled by the officer suo motu. So once again, if we see, the first was self-assessment. Second was provisional attest. Fourth, assessment of non-filers. Fifth is assessment of unregistered person. Now next upcoming is assessment of summary assessment. So fugitive means, I would say, okay, this assessment is only done in case where there is a tangible material ke assessee le bhagelu che, means he is another Vijay Mallya. I would say it on a lighter note, but if the commissioner has a proof that if the tax liability is not recovered and sufficient order is not passed, then the government will lose the revenue. So the proper officer may on any evidence showing a tax liability, means there is a crystallized tax liability of a person coming to his notice with the previous permission of additional commissioner or joint commissioner, proceed to assess the tax liability of such person to protect the interest of revenue and issue an assessment order if he has sufficient grounds to believe that any delay in doing so, means एक पण पढ़नी राह जोया बगैर, any delay in doing so may adversely affect the interest of the revenue, provided that where the taxable person to whom the tax liability pertains is not ascertainable and such liability pertains to the supply of goods, the person in charge of such goods shall be deemed to be the taxable person, liable to be assessed and liable to pay tax and any other amount due under this section. So this proviso is particularly in case of the transporters. For example, if the transporter is caught with continuing with doing the movement of goods but does not have any invoice e-way bill, and the owner has said no, no one comes to take the ownership of the goods. In such cases, the transportation person will be considered as the person in charge, and any proceeding or any order under this act will be passed on him. So I have highlighted this case that first the officer should have an evidence showing that a tax liability is there, means pehla tax liability hovi joiye, it is crystallized tax liability. Second, to protect the interest of the revenue and to protect the interest of the revenue, that if this assessment is not done, then the government is likely to lose its revenue. If he has sufficient grounds to believe that any delay in doing so may adversely affect the interest of the revenue. So he has crystallized liability and he has formed tangible material with him that if it is not done, then the government will lose the revenue. So he can proceed with the summary assessment. Now, what next? That on an application made by a taxable person within 30 days of the receipt of order passed under subsection 1 or on his own motion, if the additional or joint commissioner consider that such order is erroneous, that means that order of summary assessment is considered to be erroneous. Means if at the time of passing the summary assessment order, the officer has made a mistake in considering a person as a defaulter and that he will run away. But in fact, after taking into the factual aspect, if it comes that no, if the commissioner has the belief that additional or joint commissioner has a belief that the earlier stand of the department was erroneous, now if the assessee has cooperated and he is available, so then he if the erroneous order is if the order is considered erroneous, he may withdraw such order. Means the additional or joint commissioner has a power to withdraw this summary assessment order and can follow the procedure laid down under section 73 or 74 for the recovery of tax. Next is one judgment, which is a landmark. One should read it. It is a Supreme Court judgment of Radhakishan Industries. In this, whatever possibility is there, कि एक व्यक्ति ने क्यारे लिए भगेरु गणाय, or when a person, or in other terms I would say, when a person can be said that he will not be available at the time if he is allowed to run away, or if any single moment is passed where he is allowed to go outside the and in the market. So when a person is considered that he will not be available, and if any point is delayed, then the government will not get a revenue. So by this judgment of Radhakishan Industries, it was made ample clear. The power to order a provisional attachment of the property of the taxable person, including a bank account, is a draconian in nature, and the conditions which are prescribed by the statute for a valid exercise of the power must be strictly fulfilled, because the GST law is providing a liberty to the officer to either take the movable or immovable property or bank accounts. So if a proper procedure is as laid down in the law is not followed, so this will give rise to the innumerous litigation. So for the exercise of the power for ordering a provisional attachment must be preceded by the formation of an opinion by the commissioner that it is necessary so to do for the purpose of protecting the interest of the government revenue. So before ordering a provisional attachment, the commissioner must form an opinion on the basis of a tangible material. Tangible material means that it cannot be merely based on the presumptions, assumptions, or any other personal issue can be also there. So it cannot be based on such presumptions or assumptions. It tangible material, either he should have defaulted in the installments of bank, or there are many n numbers of examples. So he must not be regularly submitting the returns, or there can be other examples also, that the assessee is likely to defeat the demand, if any, and that therefore it is necessary so to do for the purpose of protecting the interest of the government revenue. The expression necessary so to do for the protecting the interest of government revenue implicates that the interest of the government revenue cannot be protected without ordering a provisional attachment. એવી સિચ્યુએશન આવી ગઈ હોવી જોઈએ કે અગર જો આ ઓર્ડર પાસ ના કર્યો તો ગવર્મેન્ટના પૈસા ગયા. If such is a case, then only government should proceed, then only the officer should proceed with the provisional attachment. So this judgment is one of the most celebrated judgment of GST, wherein detailed guidelines is also given that how and in what circumstances a person will be classified that he will not be able to meet the demand, and when the provisional attachment can be done. So this completes one part of my presentation, wherein we have dealt with the assessment proceedings. Now, once the assessment proceedings are done, how the recovery or the demand of tax will be proceeded with. Chapter 15, Demand and Recovery. Chapter 15 of the Act discusses the procedures for how the officers will determine the unpaid tax, detected, issue notices and orders, and the various recovery mechanisms available with them if the assessee does not pay. So, as this image also depicts, that the assessee has recovered the tax or is not paying to the government. So the government is also provided certain safeguards to the officer that based on the compliance of this chapter 15, they can proceed with the issue of demand and recovery. Default. Defaults for which notice can be issued under section 73 or 74. So there are 5 types of defaults. First is tax is not paid. Tax is short paid. Not paid means GST 3B is not filed. Short paid means GSTR 1, the liability is declared, but the liability is not paid in GSTR 3B. Tax erroneously refunded means the assessee has misrepresented the case before the officer and has claimed the erroneous tax refund. Fourth is that the assessee has wrongly availed the input tax credit means he has either taken the ineligible credit or has taken the credit of from for the purchases done from a dealer whose registration is cancelled suo moto, or has taken the credit available excess in what is available in GSTR 2A. And the last is input tax credit wrongly utilized means he has wrongly availed and utilized also the credit for the payment of tax. So if the credit itself was ineligible, it should not be further utilized. So defaults for which notices can be issued in section 73 or 74 are broadly five. So as we discussed, the tax not paid, short paid, erroneously refunded, input tax credit wrongly availed or wrongly utilized. Show cause notice. So what could be the reason? The reason as we saw in the earlier slide, that five reasons: fraud, willful misstatement or suppression of facts to evade tax means if the assessee has an intention to evade the tax means tax ni chori karvano hetu. If yes, then the proceedings will be under section 74. If there is no intention to evade tax, but it was a genuine mistake, then if it will be under section 73. Now, the meaning of suppression is also given in the act itself. Suppression shall mean non-declaration of facts or information which a taxable person is required to declare in the return statement, report, or any other document furnished, or failure to furnish any information on being asked for in writing by the proper officer. We will dissect this definition. Non-declaration of facts or information which a taxable person is required to declare means he is required to declare the same on the self-assessment basis. In the return statement, report, or any other document, return 39, statement outward supply under as declared in GSTR 1, report means 9C, or any other document which he is required to furnish or failure to furnish any information which is being asked for. So if the assessee has been specifically asked for any information and if such information is not provided, then it will be considered as suppression of fact and the proper officer will proceed accordingly. So this is a comparative slide wherein the procedure as laid down under section 73 and 74 is specified. First is show cause notice under 73(1), but an recent amendment is there that before issuing a show cause notice, an intimation of liability is given in form DRC 1A. So DRC 1A indicates that this is your estimated tax liability, and if denies the same or does not respond to the same, the notice under section 73(1) or 74(1) will be issued. Summary thereof in form, and it will be served in form DRC 01 on the taxable person on the tax on account of tax not paid as to why he should not pay the amount specified along with the interest under section 15. Under section 73, the amount of penalty will be not be specified in ASEAN. In under section 74, the amount of 100% of the tax will. For example, if there is a dispute of 100 rupees of tax, then 100% equivalent to the amount of tax will be levied as a penalty, and it will be mentioned. Notice must be served at least 3 months prior to the order And in case of section 74, it must be served before prior to 6 months. Time limit for order has also been given. Order must be issued within 3 years from the date of annual return for the FY for to which the tax not paid relates, or within the 3 years from the date of the erroneous refund. Because in 73 and 74, not only the tax liability declared in the returns of input and output, but also the erroneous refund is also considered. So 3 years from the period to which the tax not paid relates, or 3 years from the date of erroneous refund. In case of section 74, this period has been extended to 5 years. Where an SCN has been issued for any tax period and tax not paid is detected for any other period on the same grounds. Means, for example, for 17-18, a particular notice is issued for a particular dealer, cancelled dealer, and you are not liable to, means you are, notice has been issued, and same notice has to be issued for the FY 18-19 or 19-20, then the entire notice is not required and a summary thereof in form DRC 02 can be issued. Means पूरी ફરીથી આખી પૂરી SCN ઇશ્યુ કરવાની જરૂર નથી DRC 1 માં. DRC 2 માં સમરી કે સેમ ઇશ્યુ છે or for example સેમ ડિસ્પ્યુટ છે અને એના માટે સમરી in DRC 02 is issued. Grounds of fraud need not be same. If payment is done by the assessee before issuance of SCN in DRC 1, then under section 73, then penalty will be nil. And if it is done before SCN in case of 74, minimum 15% of tax, the penalty will be levied. Further, on receipt of information regarding payment, the proper officer shall issue an acknowledgement accepting the payment made in form DRC 04 and not serve any SCN or statement in respect of the tax so paid or any penalty payable. Once the SCN is issued, but the amount is short paid, then in such case also in 73, no penalty will be levied, but in 74, at the penalty at the rate 25% will be levied. If even after the SCN, the representation will be made by the assessee, that as it is a law of natural justice, that the assessee has to be provided with the opportunity of being heard. So in form DRC 06, the representation will be made by the person to the proper officer that why the penalty or the proceeding should not be done. And considering such response made, the officer will issue a final order in form DRC 07, which is called a summary order, wherein in case of 73 proceeding where there is no intention to evade tax or suppression of fact, the penalty will be 10% of the tax or 10,000, whichever is higher. But in case of 74, that is in case of fraud, 100% penalty will be levied as specified in the SCN. So this is a broad outline that what are the proceeding for recovery as specified in 73 and 74. Now, next is where the tax has been collected by the person, registered person, but has not been deposited to the department. So it is specifically provided in section 76 that every person who has collected from any other person any amount as representing the tax under this act and has not paid the said amount to the government shall forthwith pay the said amount to the government, irrespective of whether the supplies in respect of which such amount was collected are taxable or not. Means, for example, even by any misrepresentation by the assessee also, if he collects the tax and he cannot keep it himself, so such amount needs to be also paid. If not been so paid, the proper officer may serve a notice along with a summary in form DRC 1 requiring him to show cause as to why the said amount as specified in the notice should not be paid by him to the government and why a penalty equal to 100% should not be imposed. An opportunity of being heard, an opportunity of hearing shall be granted where request is received and he may make presentation in form DRC 06. After considering the representation made in form DRC 6 by the assessee, a summary order in form DRC 07 shall be passed for the recovery. If goods was taxable and the tax paid by the assessee shall be adjusted against his liability where any surplus is left after the adjustment. The supply might not be taxable rate difference. The amount of such surplus shall either be credited to the consumer welfare fund or refunded to the person who has borne actual incidence of the tax. So this section is to protect the consumer, ultimate consumer, because what we do, we go to the shop, we see the GST charge, we believe that we make payment to the shop owner and we believe that he will bona fidely submit the same to the government. But if it is not done, then the provisions of section 76 will come into the picture, wherein the tax which has been collected but not paid to the government and collected as a in the name of tax, GST na નામે કોઈ ઉઘરાવેલો tax છે, which the assessee cannot keep it with himself, he has to compulsorily deposit to the government. This is what we always say, confusion, where the tax was payable under the head of IGST and it is discharged as CGST, SGST, or it is vice versa. What happens when you pay wrong GST on supply? The registered tax person who has paid the CGST plus SGST or CGST plus UTGST on a transaction considered by him to be interstate supply, but which is subsequently held to be an interstate supply, shall be refunded the amount of taxes so paid, means wrong taxes paid. Registered tax person has paid IGST on a transaction by him to be an interstate supply, but which is subsequently held to be an intrastate supply, shall not be required to pay any interest on the amount of CGST, SGST or CGST, UTGST payable. So this is I would say a revenue neutral transaction wherein government has received a tax but has received a tax only under the wrong head, means CS or IGST in place of CGST, SGST or CGST, SGST in place of IGST. So in such cases, we need to prove only one thing, that this tax, the correct tax has been discharged, and recently a notification has come that there can be two scenarios. Okay, this mistake is identified by the assessee on his own, or it is identified by the officer at the time of audit or assessment. If the mistake is identified by the officer, then within 2 years from the date of the order, he can claim the refund. In case the assessee identifies himself, then from the day 2 years time frame is provided from the date of that notification to claim the refund. So based on this, there is no interest implication and no penalty implications also. Now, once the demand is crystallized, means the order is issued by a proper officer under section 73, 74 or 76, shall be treated as a notice for the recovery person. Any amount payable by a taxable person in pursuance of an order passed under this act shall be paid by such person within a period of 3 months from the date of service of such order. Failing which, 3 મહિનામાં અગર એ tax ભરતો નથી, crystallized tax liability, failing which recovery proceedings shall be initiated. And if the proper officer feels that this particular assessee with the prior reasons to be recorded in writing, okay, this person cannot be given a time of 3 months and only needs to be given a time frame less than 3 months to protect the interest of the revenue, then he can allow the time frame less than 3 months also. Where any amount becomes payable and it's not paid, the proper officer shall recover the amount by one or more of the following modes. By deduction. Deduction means if any amount is payable by government or government organization to the assessee, એમાંથી કાપી લેવાના. Second is by way of detention and sale of goods. If certain goods or the proper officer or the government is having any possession of the goods, they may proceed with the detention and sale of such goods so that by the realization of proceeds, the recovery can be done from third person. In this, for our debtor will be given a standing instruction that instead of paying and instead of paying the amount to the defaulter person, the amount should be directly paid to the government by attachment and sale of property, means immovable property. Next is through collector, means district collector or through magistrate. So the collector or magistrate can be requested to issue an order based on which the recovery can be done. So these are the 6 ways that are itself provided in the law by which the recovery can be done. First is by way of deduction. Second, detention and sale of from third person, means our data. Fourth is by way of attachment and sale of property. Fifth is through collector and sixth is through magistrate. So these provisions of section 78
Jaykishan, hi.
Amount can be next is provisions of section. Hello.
હા તમારો નેટવર્ક નો થોડો ઇશ્યુ આવે છે, અવાજ બ્રેક થાય છે.
હવે આવે છે?
હા હવે ક્લિયર છે.
Yes, okay. Yes. Next is regarding the payment of tax in installment. On an application filed by a taxable person in form GRC 20, the commissioner shall call for a report from the jurisdictional officer about the financial ability of the taxable person to pay the said amount. After considering the request, he may issue an order in form DRC 21 extending the time for payment or allow payment of any amount due other than the amount due as per the liability self-assessed in the return. 3B ની liability માટે આ option નથી. By such person in monthly installment not exceeding, means maximum 24 installments can be provided subject to the payment of interest under section 15. Where there is default in payment of any one installment on its due, the whole outstanding balance payable on such date shall become due and payable forthwith and shall without any further notice being served of the person be liable for recovery. આ જે 24 ઇન્સ્ટોલમેન્ટની ફેસિલિટી આપવામાં આવી, આમાં if any default is done, means if any one installment gets bounced, then the recovery proceedings will be initiated. The facility where this facility will not be allowed, this facility shall not be allowed in following 3 circumstances. First, the taxable person has already defaulted on the payment of any amount under this act, IGST or UTGST or any SGST act for which the recovery process is on. Second, the taxable person has not been allowed to make payment in installments in the preceding financial year under this act, or CGST, IGST, or UTGST Act, or the amount for which installment facility is short is less than rupees 25,000. Means already if he is a defaulter, regular defaulter, then this facility of installments will not be allowed. So section 80 pertaining to the payment in installments. This is the last slide for today's presentation. It is regarding the provisional attachment, where during the pendency of any proceeding under section 62, 63, 64, 67, 73 or 74, the commissioner of CGST or SGST is of the opinion that it is necessary for the purpose of protecting the interest of the government revenue, he may provisionally attach any property, including the bank account belonging to the taxable person, by order in Form DRC 22. This provisional attachment is to be this power of provisional attachment needs to be exercised with due care by the commissioner, wherein he must have the tangible record that to protect the interest of the revenue, it is must that the property has to be attached. Once the lab means he has passed the order in Form DRC 22, the copy of order shall be shared with the Revenue Authority, Transport Authority, or any other to place encumbrance on property, which shall be removed only with the written permission of the commissioner. Any person whose property is attached may file an objection to the effect that property attached was or is not liable to the attachment within 7 days of the attachment. Means this is an opportunity given to the assessor. Property is attached and is wrongly attached, then he is given an opportunity of being heard. The commissioner may, upon being satisfied that property was or is no longer liable for attachment, release such property by issuing an order in Form DRC 23. Where the property attached is perishable or hazardous in nature, if the taxable person pays the amount, the lower of the market value of such property or the amount that is or may become liable by a taxable person, then such property shall be released forthwith by an order in Form DRC 23 on proof of payment. If the assessee fails to pay the amount, the commissioner may dispose of the property and amount realized the amount realized will be adjusted against the dues. So once the property is attached, the commissioner can himself review and pass the release order in DRC 23 on an application or objection filed by the officer in case the objections are filed by the assessee and they are found that no, this order was passed on the wrong grounds and he revisits the ground. Second, if he fails to pay the amount, so if the goods are of hazardous nature, then he may sell off the property and adjust the proceeds against the same. Every such provisional attachment shall cease to have effect after the expiry of 1 year from the date of the order. So this is the provision based on which many High Court judgments are there, that after expiry of 1 year, there shall be auto release of the property, because how much time can a commissioner withhold a provisional attachment? So it is clearly prescribed in law that maximum time frame of 1 year should be there. Maximum that maximum for a period of 1 year, the property can be attached. After this, there will be automatically released. So this was the provisions regarding and recovery, and I have tried to cover as much as possible regarding the assessment also. Now I will be open for question and answer session. This is all from my side. Any question and answers?
If anyone having questions, please ask in the chat box, as well as if if you raise the hand, I'll give you the mic. Ashok bhai, no questions. हाँ Ashok bhai.
Hello.
हाँ sir.
हाँ.
Yes.
Good evening.
Good evening.
અવાજ સંભળાય છે મારો?
Yes, yes. It is
हाँ जी.
audible.
સંભળાય? સંભળાય.
હા.
મારો પ્રશ્ન એ છે સર કે એસએસસી મારો એક એસએસસી છે, એમાં એવું છે કે એરંડાનું પણ ટ્રેડિંગ કરે છે અને સાથે સાથે કપાસિયામાંથી ઓઇલ પણ બનાવે છે. તો કપાસિયામાંથી કપાસિયાનું ખોળ પણ બને છે. તો જે 42 અને 43 મુજબ જે આઈટીસી રિવર્સ કરવાનું થાય એમાં રેશિયા માટે ટોટલ ટર્નઓવર લેવાનું કે પછી માત્ર મેન્યુફેક્ચરિંગનું ટર્નઓવર લેવાનું ધ્યાનમાં?
ટ્રેડિંગ અને મેન્યુફેક્ચરિંગ બિઝનેસ બંને જોડે કરી રહ્યા છે.
હા.
એમાં ટોટલ ટર્નઓવર જ કન્સિડર કરવું પડે. યુ કેન નોટ બાયફર્કેટ.
તો સાહેબ માત્ર ખાલી મેન્યુફેક્ચરિંગ ટર્નઓવર ધ્યાનમાં ને, કારણ કે આમાં તો સાહેબ એસએસસી ને ટેક્સનો માર ના પડે, કારણ કે ખાલી એરંડાનું ખાલી ટ્રેડિંગ જ કરે છે.
Yes, but this is a very specific query. We need to go through for this industry also that why a specific input is considered, because rule 42 is very clear that only specific input against the specific output can be claimed as exemption. But for the base turnover, it needs to be considered on a totality basis only.
આના એસેસમેન્ટ આના ઘણા બધા ડિમાન્ડો ઊભી થઈ છે. વાંધો નહીં.
Yes, yes.
થેન્ક યુ સર. થેન્ક યુ.
Anyone else having question? Any question? I think we are not having any further question. So, Jaykishan bhai, you had given a fantastic and wonderful presentation. Karthik bhai had to leave for some reason, so he is not there in the webinar. I must mention about the starting of the webinar, the video you played. So it was a very interesting one and indicative one. So thank you. And I hope we'll share this PPT with our all the members so that they can be benefited with your permission.
Yes.
Right. I would like to present this certificate of appreciation on behalf of both the association. So please accept it.
Thank you very much.
Thank you. And as we don't have any further questions, we'll end this webinar. So I wish to thank you, Jaykishan bhai, for your wonderful presentation as well as giving your time. And I would like to thank all the participants who taken the benefit of this presentation. And see, the assessment is something that is inevitable. Everyone is going to have it. And unlike the direct tax part, indirect tax act plays a different role in a different direction, where the chances of errors are much high. The assessment procedure is completely different, and there are so many provisions. The good thing about GST, we must say, is the procedures which are being laid in the rules. There are specified forms and everything. So yes, the benefit of doubts are very less. The courts are coming up heavily if there are procedural lapses. So one has to go through, as you have rightly justified in your entire lecture, that one has to go through the provisions very minutely. There are possibilities that you can claim that the notice is void ab initio if rules are not properly followed. And for that, you need to have thorough knowledge of all the sections and the rules which are applicable in these things. Right, Jaykishan?
Yes,
so,
yes, completely.
So we thank you. And with this, we end this webinar. Thank you all.
Thank you.